been a while since we've had the luxury of thinking about the long run. And I think we do have the luxury now, and I think there are things coming together that make these long-run views actually very potent at the moment. Just to put some context at that, this is just a very simple measure of macro volatility. Inflation, vol, over the last 5 years, and output vol. And you can see it's, of course, for reasons that everybody knows about, it's high. Maybe not everybody realized that just before COVID, it was at historical all-time lows. And I think a big question is, can we get back there? Because markets are certainly not pricing that we do get back there. That, market pricing on various forms is suggesting that, in bonds, we're not going back to those really lovely levels of pre-COVID low volatility. I say lovely, I don't really mean lovely, because I've called it the great instability. Advanced economies had the great stability. EMs, it was never great. It was secular stagnation. It was populism. But nevertheless, macro vol was good. Asset prices were strong. What we do think, and this is now Oxford Economics forecast for emerging market inflation, and focus on the yellow line, that's the median. We already think that we're going to dip below medium inflation in EMs, so the historical inflation, by the end of next year, the end of this year, early next year. So there's going to be a slight overshoot. So, our view is that inflation is coming down in EMs. Market's view isn't that bonds are coming down, bond yields are coming down. So there's always something there encouraging to think about. Hopefully you're sniffing opportunities already, but maybe a bit skeptical. But what I want to go through now is 3 structural trends, which I think are maybe, we should do EMs a little bit more credibility for them. And I mean credibility in a way quite literally. I mean, one of the things we did towards the end of last year was just an assessment of monetary policy credibility. And we all knew EMs got ahead of the curve, they got ahead of advanced economies, they did a good job in the crisis. Now, part of that, I think, is based on actually them passing a stress test, a really big stress test in the Slavai shocks era of monetary policy credibility. So we looked, with our economists' help, right the way through Oxford Economics, at all the instances of undermining monetary policy frameworks in that time. Accountability, transparency, formal independence, informal independence, and there really weren't that many torpedoes. Argentina, of course, Turkey, of course. But by and large, there are a lot of instances of little superficial scratches, I'd like to call them.